Friends, the topic of today's podcast is Beyond Elections. Every 5 years, Indian democracy conducts an unparalleled event. A billion people decide on their next government. This is no ordinary exercise. Its sheer diversity, composition, and the kind of organization that goes into this electoral decision is unparalleled. Economically, elections basically set the course for the future. Whether the electorate votes for continuity or change, the Indian economy more or less works within a certain framework. The kind of changes which a new government can bring are largely driven by continuity, and change is mostly incremental. A good example can be in the way the Aadhaar was taken from the previous regime and implemented by the current regime. Another example is how the GST, which was originally proposed in 2003-4, was implemented after a gap of 15 years. Reform is something which every Indian government has to be committed to. The reason is simple: only if we reform, debureaucratize, and power growth, we would be able to meet the aspirations of our billion voters. This is no easy challenge. India is a country that is heavily dependent on the monsoon. It is a country which is heavily dependent on its ability to attract foreign investment. We need foreign currency just to buy our energy requirements. It is no easy challenge. Therefore, a new government cannot really deviate too much from the previous government. So whether it is a vote for continuity or a vote for change, we will see the next government take forward the benefits which have been created by the existing government. An important thing is that in the last 5 years, we have seen a lot of reform, a lot of change, macroeconomic stability, better management of inflation, controlled in exchange rate, and very robust foreign direct investment. It is likely that all these are going to continue in the next 5 years too. Importantly, we did not see much of private investment within the country during the last 5 years. This is something which was really not in the control of the government. The simple reason being that companies did not have the kind of balance sheets to grow. The good news is several of the core industries have seen better times and are likely to see much better times. This must kickstart the much awaited investment cycle. We have waited for nearly 11 or 12 years for the private investment cycle and the capital formation in assets to happen, to get revived. But this has not happened, but I predict that this will happen in the next 5 years. Even if the same government is elected again, it will incrementally pursue other reforms which it thinks will be a priority. It is not going to simply rest on the laurels of what it has done in the last 5 years. That really is the great thing about our economy. Our stock market has benefited from a small subset of companies which performed very well even when the core industries were struggling. This has been the story of our stock market in the last 5 years. I am of the view the next 5 years will see much wider participation, more broad-based economic performance, and a revival in the core industries. As investors, we need to prepare our portfolios for that as well. It is not a bright idea to simply expect what happened in the last 5 years to repeat in the next 5 years. While good news will come, good things will happen, it may happen in a different place. As investors, we need to be ready for that. These 45 days is going to see the stock markets oscillate, show volatility, and see spike in fear and greed. Investors must understand that election trade is largely speculative, and one should develop the kind of patience both to invest and to get returns that can kind of outbeat the electoral fever. It is important that we wait and take very measured investment decisions that will work out over the next 5 years. I believe that good times are set to continue, and investors should ensure that the benefits of those good times accrue in their individual portfolios. Happy investing.